Central banks play a crucial role in the global economy, but many people may not fully understand what they do or how they operate. In this video, we'll provide a basic overview of central banks and their functions. Have you ever wondered how interest rates are set, how money is created, or how banks are regulated? Central banks are responsible for these important tasks, and much more. Central banks are the guardians of a country's monetary and financial system. They act as the bankers to the government and other banks in the country, and are responsible for promoting economic growth and stability. Today in Illuminating Insights channel, we'll take a closer look at what central banks are, what they do, and how they operate. By the end of this video, you'll have a better understanding of the critical role that central banks play in the modern economy. Let's start with the basics. A central bank is an institution that manages a country's currency, money supply, and interest rates. It acts as the banker to the government and other banks in the country. Central banks are typically owned by the government, but they operate independently to maintain financial stability and promote economic growth. Central banks are different from commercial banks, which provide services to individuals and businesses. While commercial banks are profit-driven, central banks operate in the public interest, aiming to maintain price stability and promote economic growth. Central banks have been around for centuries, and their history can be traced back to the 17th century in Europe. The Bank of England, founded in 1694, was one of the first central banks in the world. Today, almost every country in the world has a central bank, which plays a critical role in the functioning of the global economy. Let's take a closer look at the functions of central banks and their importance in the modern economy. There are several key roles that central banks play in managing a country's monetary and financial system. Firstly, central banks are responsible for controlling inflation and managing the money supply. They do this by setting interest rates and regulating the supply of money in the economy. Secondly, central banks regulate banks and other financial institutions to ensure that they operate in a safe and sound manner. This helps to maintain financial stability and prevent bank failures. Thirdly, central banks manage a country's foreign exchange reserves, which are used to support the value of the currency and maintain stability in the foreign exchange market. Finally, central banks play a key role in promoting economic growth and stability. They do this by implementing monetary policies that support economic growth, while also ensuring that inflation and financial risks are kept under control. Now, we'll take a closer look at how central banks operate and the tools they use to carry out their functions. Central banks are typically governed by a board of directors or governors, who are appointed by the government. They are responsible for setting monetary policy and making decisions about interest rates. Central banks use a range of tools to carry out their functions, including open market operations, reserve requirements, and discount lending. Open market operations involve the buying and selling of government securities in the open market to influence the supply of money in the economy. Reserve requirements are regulations that require banks to hold a certain amount of cash reserves to ensure that they have enough liquidity to meet the demands of their customers. Discount lending is a process by which central banks lend money to other banks in times of need, providing them with short-term liquidity to meet their obligations. By using these tools and others, central banks are able to manage the money supply, control inflation, and maintain financial stability. Now, let's explore some of the challenges that central banks face and the future of central banking. Central banks have faced many challenges over the years, including financial crises, inflation, and changing economic conditions. During times of crisis, central banks play a crucial role in stabilizing the financial system and supporting economic recovery. However, central banks have also been criticized for their policies and their role in the global economy. Moving forward, central banks will need to navigate a rapidly changing economic landscape, including new technologies, shifting political dynamics, and global economic integration. Despite these challenges, central banks remain a critical component of the global financial system, playing a key role in promoting economic growth and stability. Central banks play a vital role in the global economy, and their policies and decisions can have far-reaching impacts on businesses, governments, and individuals. As we come to the end of our video, we hope that you've gained a better understanding of central banks and their role in the global economy. But we also want to hear from you. What questions or thoughts do you have about central banks and their operations? Don't forget to like and subscribe to Illuminating Insights channel. Share the video with your friends and family to spread the knowledge. You can find our PayPal on the channel if you want to support us. Thanks for watching.